It's the Friday edition of Business Morning. Welcome and thank you for joining us. I'm Chimeze Obi Iwago. Well, the coronavirus pandemic is unfolding into an event that will starkly define our world in many ways. We are having to reassess and adapt our most routine behaviors, such as how we work, shop, and communicate with loved ones. And it is inevitable that when this is finally over, some of the changes we have made will lead to permanent behavior change. The response from businesses involved in payments has had a clear theme, and that is discouraging the use of cash to rule out its ability to spread germs. While the WHO has stopped short of actively discouraging the use of banknotes, some experts say when possible, it's a good idea to use contactless payments, and that is where mobile money comes in. Joining me now to look at this is the head GSM Association Sub-Saharan Africa, Mr. Akinwale Goodluck. Good morning, Mr. Goodluck. Thank you for joining us.
Good morning, Chimeze. Thank you very much for having me.
So when we talk about mobile money in Africa, Kenya's M-Pesa comes to mind. Can you give us an overview of what mobile money is like in Africa?
Thank you very much. I think we've seen mobile money continue to trend in all the right directions in sub-Saharan Africa. M-Pesa has become the poster boy for mobile money all over the world, and particularly in Africa and South Asia. The good news, however, is that the mobile industry today has a host of seasoned providers with a broad set of operational capabilities, a full suite of products, and I would like to say global reach. At the end of 2019, we've seen mobile money continue to grow extensively in sub-Saharan Africa, with about 470 million registered mobile accounts in sub-Saharan Africa today, representing about 12% year-on-year growth. We also have about 181 million active accounts. These are accounts that have done a transaction in the last 90 days, and a total in excess of 23 billion transactions in 2019, with a value in excess of $456 million. Again, trending in the right direction. So you can see that mobile money is definitely on the up across Saharan Africa.
Now, the efficiency of the payment and settlement system of most countries is considered as a major catalyst for growth. In Nigeria, the velocity of circulation of money is approximately 5%, and GDP growth rate is about 1.87% compared to Kenya's velocity of circulation of money of 3.1% and GDP growth rate of about 5.4%. Do you think that the adoption of an aggressive mobile money and wallet system will help the Nigerian economy, which is already technically in recession?
Absolutely. We like to think that we like to say that Nigeria is a sleeping mobile money giant, and it's also home to the continent's highest adult population, with an unbanked adult population of about 60%. So we see that the unbanked is a significant challenge for us in Nigeria, but I also like to think that it's an even more significant opportunity. We've seen great progress through the emergence of a lot of the app-based wallets, and players like InterSwitch and Flutterwave deserve a fair amount of commendation. However, to reach the majority of the unbanked in underserved areas, we need an aggressive mobile money regime. We need a mobile money regime that is ubiquitous. We need a mobile money regime that has brand recognition, is trusted. It's not necessarily internet reliant. It's not necessarily smartphone reliant, and has a significant agent network.
Now,
yeah, go ahead.
Yeah, Delarue, that's UK's money printer, is suggesting that the use of cash as a medium of exchange is likely to fall, as one of the myths of the COVID-19 pandemic is that community transmission of the virus could be accentuated by the use of old notes. Now, do you see this fear and likely switch to electronic payments as a big opportunity for the telcos and the mobile money products?
Yes, I tend to agree with Delarue that for sure it will not be business as usual post the pandemic. Mobile money has been a great discovery, and I'd like to say ally in the fight against the pandemic. Mobile money reduces the need for face-to-face interactions and exchanges, thus limiting the spread of the virus. We also saw mobile money as a big enabler in several African countries during the lockdown and curfew. We also see that operators were quick to rise to the challenge by encouraging the use of mobile money in many jurisdictions, removing or reducing the cost of transactions completely. We also saw in the course of the pandemic, a lot of governments and humanitarian organizations have been disbursing cash palliatives, and mobile money has proven to be a safe, effective, and transparent way of doing this.
Now, the banks in Nigeria are concerned that licensing the telcos as payment service banks is a recipe for cannibalization of the financial services industry. Do you think these fears are justified, and how can they be allayed?
I think that the concerns, in terms of cannibalization have largely been unproven in most markets. When you look at Ghana, you look at Kenya, you look at Ivory Coast, and you look at India. In most of these markets, we have seen an increase in bank accounts in tandem with mobile money adoption. I like to say Ghana and Kenya are great examples. Mobile money helps mobilize deposits for the banking sector, and I mean deposits that would otherwise have either been too costly or inaccessible for traditional brick and mortar banks to mobilize. So in most jurisdictions, the pooled funds can only be intermediated by the banks. The payment services licensees are not allowed to give loans and do a lot of other things. So, I think that mobile MNOs and banks must worry less about whose lunch will be eaten, but rather focus on jointly baking a much larger cake.
Now, are there any risks to the financial systems?
Well, when you look at mobile money and how it operates, mobile money processes a lot of transactions. In terms of the number of transactions, it will typically eclipse the number of traditional banking transactions. But when you look at the value is always a very small fraction of the total throughput in any economy. Kenya, that has the highest mobile penetration rate in sub-Saharan Africa, in excess of 73-74%, only processes less than 10% of its throughput via mobile money. Ghana is 4%, India is less than 1%, if I recall correctly. And when you look at the size and the robustness of the Nigerian financial system, it can definitely support a lot more in terms of mobile payments without any systemic risk. Nigeria already has significant, robust anti-money laundering provisions. It has, is one of the leading African countries in the area of data privacy. And MNO networks are also very, very secure. Don't forget also that mobile money has set maximum thresholds. So the possibility or the risk of, I don't think it poses any systemic risk at all to the financial system.
So why haven't we seen telco-led models as opposed to bank-led models for the mobile money industry?
I think one has been a question of regulation. Two, whenever there's disruption, there's always resistance. In 2018, the central bank came up with new regulations, and pursuant to those regulations in 2019, I think it issued 3 approvals in principle. The expectation is that the central bank will go ahead to license all the major telcos in Nigeria, ensure a level playing field, and allow mobile money to scale. So we're definitely headed in the right direction. It will require a little bit more political and regulatory will, and also regulatory certainty to deliver the objectives of the CBN to achieve 95% financial inclusion by 2024. So the bottom line is regulation.
inclusion. Yes, financial literacy and, of course, inclusion is considered as a major ingredient for development in African countries. Now, Nigeria has an unbanked population. You did mention that, of approximately 60%. Now, do you think that mobile money and wallets will accelerate the process and thus enhance the development of the financial system?
Absolutely. The industry has an opportunity to play, for what I like to call a catalytic role in expanding the reach of financial services to underserved and underbanked rural communities particularly. It also will help to lift vulnerable people, the most vulnerable people in our societies, out of poverty. It will bring credit, it will bring lending for a lot of people in our rural communities. Their telephone number is their address, is their database, it's everything to them. They can't afford to lose it. So it gives us an opportunity to almost overnight bring banking services to all those who remain unbanked in Nigeria.
All right, so how would you compare what is being done in Kenya and what is done in other African countries? And of course, what lessons are there to learn?
I think one thing is that Kenya was a pioneer. Mobile money is about 11 years old in Kenya. So they've had a good opportunity to learn and to sort of develop best practice. Mobile money is well regulated, well controlled and governed with a very liberal regulatory framework in Kenya, allowing banks and non-banks to participate. I think also that the authorities in Kenya have recognized that Kenya is a mobile-only country, just like the rest of sub-Saharan Africa, and they have leveraged their financial inclusion strategy on mobile technology. What you also see in Kenya is that adoption and usage has been driven by an unparalleled entrepreneurial spirit and also a very robust agent network. We have all these things in abundance in Nigeria, so I'm really confident that with the right regulatory support, we can achieve and perhaps even exceed the achievements that we already see across sub-Saharan Africa. The relationship between banks and MNOs in Kenya is also very instructive. It's symbiotic and complementary. Bank accounts have overtaken mobile money accounts in Kenya. As mobile money account holders grow, they will migrate to traditional bank accounts. And the great thing for the banks is that by the time they're migrating, they're already accustomed to digital banking. So it's a much easier customer to onboard. It's a cheaper customer to service, and also brings with it all the other benefits.
And so what is the outlook for Nigeria and indeed Africa's mobile money market?
I think the outlook is very, very bright, subject to some of the regulatory issues being sorted out, the build of trust between the banking sector and the telecommunication sector. We have all the ingredients to really, really do great things. I think perhaps the biggest potential for mobile money in Nigeria is the ability to very quickly digitize government payments. We've seen very successful examples in a lot of other African countries, and I think that Nigeria will follow the same trajectory. So,
all right.
Yeah, okay, thank you.
All right, thank you very much, Mr. Akiwale. Good luck. He's the head GSM Association Sub-Saharan Africa. Thank you for your time.
Thank you very much. Pleasure.
Yes, and for as long as life exists, people will always need food, no matter how little one's income is. You would agree with me that food will always own a share of it. And even if a time comes where there is no food to buy, people will grow their food to eat, all in a bid to survive. And even as COVID-19 is here, part of the survival strategy is to grow the agricultural sector and ensure food security in Nigeria. Unfortunately, food insecurity has been on the rise in Nigeria. Just a few months ago, the Food and Agriculture Organization predicted that 7 million Nigerians will experience food shortage between June and August this year, as 19 northern states and the Federal Capital Territory have been identified to face food and nutrition crisis. What is the government really doing to avert this? I'm being joined by the Honorable Minister of Agriculture and Rural Development, Mr. Sabo Nanono. Thank you very much, Honorable Minister, for joining us on the show.
Thank you for having me.
Sure, I'm sure you must have heard or read about various predictions by the United Nations Food and Agricultural Organization and, of course, the World Food Programme about the impending food crisis in Nigeria because of the locust invasion coming from the East Africa into West Africa that, of course, will affect Nigeria. Does that worry you? And if yes, what are you doing about it?
Well, definitely it worries me and it worries everybody, and we have got the early warning system from FAO about 2 months ago, and they have taken steps to mitigate the impact of this locust. Last week I launched the aerial spray and also underground spray in Kebbi State, and that is part of our preparation for the frontline states. I think about 12 states that are likely to be affected by this local invasion. So we are pretty much aware, and we are taking steps to ensure that we minimize the effect of this, if not totally eliminate the effect of these locusts.
Now, the bulk of agriculture in Nigeria is subsistence agriculture. There is a big difference, between subsistence, missionary, and commercial agriculture. In other economies, we find an optimal mix of these three. Now, what has Nigeria done to make that transition from subsistence agriculture to commercial?
I think the first thing to note is that 70% of agriculture in this country is subsistence. And this subsistence farming has been sustained in the country over decades and still very strong and still contribute probably about 24–25% of the GDP. That should be understood clearly. But I think Nigeria has now arrived to the point where commercialization in agriculture is a must. And I am happy to note that over the years, at least over the last 10–15 years, a lot of agricultural commercialization has taken place in this country. And the government is creating enabling condition for agriculture commercialization to take place. For example, we are committed to now agricultural mechanization in this country. We are poised to rationalize our research institute to give us better seeds and better advice. We are going to train probably extension agents in the region of 200,000. Now, the 130,000 naira and power, we are converting them into extension agents. So we are taking the steps toward that. And more importantly, the private sector initiative in this regard is very, very important. And I think from big industries to smaller industries, a lot is happening in terms of commercialization of the agricultural sector. But the key to the commercializing of agriculture in this country is mechanization. And that's what we are embarking now. I would like Nigerians to understand that in this country we have about, it is estimated that we have about between 84–92 million hectares of cultivatable land. As at the moment, we are only cultivating about 34 million hectares. Even this 34 million hectares is not at its optimum level because of lack of mechanization. The level of agricultural mechanization in this country, the level of penetration is so low. It's about 7 tractors per 100 square kilometers. The standard is 127 tractors per 100 square kilometers. In the African continent, Kenya is one of the countries that is leading in mechanization. They have about 27 tractors per 100 square kilometers. So if you look at it, we have a long way to go, but we have to start somewhere. To catch up even Kenya, we need to get 60,000 tractors on board in this country. And we have started, and I believe in the next 1 year, the agricultural mechanization in this country will come on full swing. We are going to involve probably about 632 local governments, and all these local governments will have all the necessary equipment, all the necessary administrative preparation for the mechanization to start through the establishment of service centers in these 632 local. Coupled with that, there will be about 140 agro-processing centers to cluster local government producing common commodities, and then we establish processing plants there.
All right, Honorable Minister, just hold your thoughts there. We'll take a quick break and we'll be back to you to continue with that conversation. So we go on a quick break now. We'll continue with that conversation when we come back. Welcome back, and this is Business Morning. We're still looking at the agricultural sector, talking about ensuring food security in the country, and I still have the Honorable Minister of Agriculture and Rural Development, Mr. Sabo Nanono. Yes, Honorable Minister, if I did get you right, you were saying that the government is channeling all resources towards achieving commercial agriculture. Now, yes, we heard the President in his Democracy Day speech say the government, through the Food Security Initiative, is promoting grow what we eat and eat what we grow. How come, in spite of all the government's efforts, food inflation is very high? And what is being done to ensure that output gets to the market?
First and foremost, I think we have noticed increase in prices within the last 2 to 3 months. And I think for 2 reasons or 3. One, as an effect of COVID. I think there is panic buying. People are afraid that the COVID-19 is likely to affect agricultural production. 2, there is an element of hoarding. It's not much. Some big business people have entered the market and buying foodstuff to hoard in anticipation that the prices are going to go up. And thirdly, there is a slight government intervention, particularly by the Ministry of Disaster and Humanitarian Affairs. They have gone into the market to purchase for distribution to ADFs and other related. And the fourth, which is also important to note, normally around this time, when the rainy season is beginning to start, when the rainy season starts, normally farmers tend to be a little bit cautious. They don't bring out their surplus to the market. They wait to see the direction of the market. Then as soon as the direction of the rainy season, and I think once they have confidence that the rainy season will come as usual, I think some of these surplus they held back, they will bring it into the market. And I think probably within the next 1 to 1.5 months, you are likely to have some prices coming down, especially rice, as the dry season paddy rice is coming on board. And also, the farmers would have seen what will be the trend of the rainy season, and they will start to bring in their surplus to the market. I believe it's a temporary thing. It will come down, especially as it affects grains and cereals.
Well, Honorable Minister, I'm going to take you up on that if eventually the prices don't come down, because that's where it affects all of us as Nigerians. Anyway, Ivory Coast and Ghana, for instance, are smaller countries than Nigeria, and yet they are number 1 and 2 in cocoa production. Nigeria is number 3. Now, these 2 countries have been able to embark on forward integration in the value chain of cocoa production. They actually produce cocoa pastes, thereby extracting more from the value chains. What is Nigeria's plan in forward integration?
Okay, I think you have touched something that is very, very important and very, very crucial in our economic development, especially for cocoa in the southwest. It baffles me. The southwest is the most urbanized, the most educated, and probably rich and experienced educationists and experienced people in the agricultural sector. How we allow the situation to reach this place, that still we are planting cocoa that will start yielding after 7.5 years. In Ghana, Ivory Coast, and even in Togo, they are planting cocoa that will produce will start yielding in 2.5 years, gap of about 5 years. How did they do it? Tissue culture. And how do they finance that tissue culture? They finance it through the African Fund for Technical Development, of which Nigeria is the largest shareholder. Not only Nigeria is the largest holder, Nigeria also holds the chair. You can borrow money up to 15 years with in dollars to develop your agricultural sector, especially as it affects economic trees like cocoa, as well as in agro-allied industry. But somehow we were careless in not taking that opportunity. I intended to go to Lome, where the headquarters of African Band for Technical Cooperation is based, to see what we can do in this regard to attract money into our cocoa industry. Unfortunately, this COVID has hindered me from going there. But that's the problem. It's really is the issue of commitment and the management of our own affairs in this country that brought this to us. I am happy to note that in Cross River, the government there is very serious, and cocoa production has gone up there. And they established a very versatile and a new cocoa processing plant, which they intend to create a further value chain through processing of cocoa into powder and other related products.
Okay, you just unveiled what you called the Green Initiative. That's a 10-year agriculture program, what about $1.2 billion, and of course targeted at creating 5 million jobs and injecting $10 billion into the economy. Can you tell me more about this scheme, really?
Well, the agricultural mechanization program was initiated since about 3-4 years ago. It is only coming into fruition now. It's a negotiation between Nigeria and the Brazilian government. And it was agreed that Brazil will come with a package of agricultural mechanization and technology transfer in agriculture into this country through this arrangement. The Brazilian Development Bank and Deutsche Bank in Europe are financing the venture, which comes to about $1.2 billion. The African, the Islamic Development Bank is ensuring the money. And how is this going to work? It is going to work through the creation of service centers. And what are these service centers? The service centers are going to be owned by private sector. It is going to be a private sector-driven enterprise. The only role the federal government is playing is to give guarantee to cover the loan that is going to be provided. And each service center will have new directors, will have an IT and a management office, will have a mechanical workshop, and we have a storage facility. The prime mover is a director hiring scheme. And each director hiring scheme is backed up by a tracking system, so that wherever your track is working throughout this country, is going to be, its location will be known, the amount of work done, and the money it generates per day would be known. Then secondly, if you look carefully, this initiative is going to empower the local economy. You are going to make an investment of probably between 5 to 7 million naira, but you will be handed over an asset of nearly 150 million naira or even more. And from the experience, being a farmer myself, I know a director can generate anywhere between 65 to 70,000 naira per day. The net position may be anywhere in the region of 35 to 40,000 naira. So we have a net surplus of nearly 35,000 naira per day. If you estimate carefully, over a period of probably 6 to 7 years, you will be able to pay off this loan.
Honorable Minister.
And you will still,
Well, we really don't have, yes, we really don't have much time, but before I let you go, yes, you've railed out some of these plans, but oftentimes the government is set to have fantastic ideas and policies, but implementation and policy inconsistency is always a problem. So how will this change, or has this changed now?
I have given you the answer indirectly. This project is going to be driven by private sector. People are private people are going to own these directors. Government is going to is not going to be involved in the ownership of these directors. And I think if you look very carefully, if people know these directors are their own, it is going to be a business, not the usual business of government. So that's the trick. I will not support the involvement of government in this project except to the cover of the guarantees that we are going to give. So
right.
the sustainability of this, the secret behind it is that the ownership will be private sector, not government.
All right, thank you very much for your time, Honorable Minister, Mr. Servo Nanano, the Honorable Minister of Agriculture and Rural Development. Okay, a quick look at the latest development on the global oil market as prices pushed higher in early trade today, building on gains in the previous session after OPEC producers and allies promised to meet their supply cut commitment, and two major oil traders said demand was recovering well. U.S. West Texas Intermediate crude futures climbed 14 cents to $38.98 a barrel, while Brent crude futures crawled up 7 cents to $41.58 a barrel. Both contracts rose around 2% on Thursday. Plans by Iraq and Kazakhstan to compensate for overproduction in May on their supply cut commitments supported the market. The promises came out of a meeting by a panel monitoring compliance by the Organization of Petroleum Exporting Countries and its allies, a grouping called OPEC+. Okay, the development of infrastructure in Nigeria has primarily been through the traditional form of contract award by federal and state governments through budgetary allocations. However, over the years, governments have sought to involve the private sector in infrastructure development via public-private partnerships. But has it ever worked? Can PPP save Nigeria's infrastructure? To answer these questions is the director at Center for Infrastructure, Policy Regulation and Advancement, Lagos Business School, Dr. Bongo Adi. Dr. Adi, thank you very much for joining us.
Thank you, Maisie. Thanks for having me.
Now, the president in his Democracy Day speech highlighted the government's new commitment to deploying PPPs to step up Nigeria's infrastructure, which he acknowledged is below par with other nations. Do you think government is convincing on this new commitment?
Well, yes. I think that's a categorical answer because as things stand right now, we don't seem to have many options. We do not have much alternatives to using PPPs. That is incentivizing the private sector to get involved in infrastructure delivery. But having said that, we need to understand that the private sector cannot do everything. It is not all infrastructure that the private sector can deliver. So I remember, I just had you asking if Nigeria has made any progress with respect to PPPs. Well, it's still new. I think the ICRC, the Infrastructure Concession Regulatory Commission, was established in 2008. That's about a decade now. So I know that we would be interested in knowing how many PPP contracts or PPPs have been executed or implemented over this period. Well, the truth is that when it comes to big ticket projects, there seems to be, it's questionable. But if it is smaller versions of PPPs in hospitals, in housing, I think it has quite taken off. That's my view, my perspective on that. It's quite taken off when it comes to smaller PPPs. But then the PPP that is worth it is actually the big ones, because when we, again, learn lessons from other countries, we know, you will see that they've actually scaled up the deployment of PPP for very big infrastructure projects. And that is what makes PPP interesting and viable as a means or a tool to finance and procure public infrastructure.
Is PPP record in Nigeria and indeed Africa so unencouraging? Do you think finance is the issue or the lack of political will?
Well, I wouldn't say financing is an issue because, okay, just yesterday I was involved on a webinar with Turkey, which was convened by the ICRC and also my center, the Lagos Business School. So it was a knowledge sharing webinar between Turkey and Nigeria. So we had representative of government of Turkey. In fact, the chief PPP proponent in Turkish government, and then the many private sector, including the Iga airport, one of the biggest airports in the world, which is being procured by PPP, and so many, about 7 Turkish private sector PPP leaders were involved in that knowledge exchange. And in Nigeria, we had 5 ministers, including the Honorable Minister for Works and Housing, the Minister of Finance, the Minister of Power, the Minister for State for Health, Minister of State for Health. They were all there, and Minister of Aviation as well. The Honorable Minister of Aviation, Hadi Sirika, was there, and the state, from the beginning to the end of that webinar that lasted, was a marathon session of 4 hours, and then we were listening to what Turkey has been doing well, to ensure their success, because right now Turkey is the most successful country in Europe when it comes to PPPs. In the world, they are number 4 after Brazil, India, and China. So what is it that Turkey has done? I mean, I want to bring in the Turkish experience here because based on what we heard yesterday from Professor John Davy, who is of Ultra Capital, the UK, who was also in that webinar, when we compare the sovereign rating of Turkey and Nigeria, we find out that Nigeria is actually better placed, a little bit. They both are, sub-investment grade, okay, when it comes to sovereign ratings of the 2 countries. But then Turkey has been able to attract almost close to $200 billion in infrastructure project financing over the past few years. Nigeria, that seems to be slightly better, when it comes, because sovereign ratings that we need to be looking at, because that is what the investors will be looking at in driving funding to, potential destinations. So I don't think that funding is the problem, because if it were, then Turkey would not have been able to muster that pool of funding they have deployed to ramp up infrastructure, because across all sectors, you see PPPs, even in culture, tourism, the airport they are designing, they say that it's actually not, they are not designing an airport, it's a monument to aviation, designed by the man who designs the Ferrari. So you could see how far they have gone and how fast they have gone with PPP. So it's not a question of funding in any way, because we can still attract funding. So I think the challenge is the political will.
Okay, so do you think that perhaps the government officials that were present at that webinar had earning lessons to learn from what they heard?
Oh yes, they made commitments, and also they shared the progress and the efforts they've been making, to ensure that private, of course, competent private sector bodies are brought in to help in solving some of the infrastructural bottlenecks. But then they also made it clear that it is not all infrastructure that has to go the way of PPPs. There are some that government has to actually provide, if, of course, given our peculiar or unique context. But there's that commitment, so across all the ministries. Of course, we also listen to the Mainstream Energy, that is the company that is managing the concession of Kainji, in hydroelectricity. So they also share their experience, of course, highlighting some of the challenges which come from mainly, the government side of things. Of course, the representatives of government, the ministers, made commitments, and they were happy. They stayed, stayed for the entire 4 hours, listening to the presentations and answering questions. So they were open, receptive to new ideas and innovations to improve infrastructure.
All right. Thank you very much for your time, Dr. Adi. Let's just hope we get it right. Thank you. Dr. Bongo Adi is the Director, Center for Infrastructure Policy, Regulation and Advancement at the Lagos Business School. We'll do an opening call to London as well as market activities here after the break. Do stay with us. We start off this segment from the streets of London with Juliana Olainka. Good morning, Juliana. Well, it's the morning after the Bank of England has announced a new £100 billion stimulus package for the UK economy. How are the markets reacting at the open?
Good morning, Chimmy. Well, the market's opened higher this morning. One of the first times it's done that this week. And I believe the kind of fears and anxiety that are coming from that second wave of infections has been lifted because, yes, the economy has been stimulated once again. So the traders are pretty happy about that. We've also had some retail sales figures this morning. They were much better than expected. So month on month, retail sales has grown 12%, which is a huge boost to the economy, especially the high street, because, of course, it just opened again last week. Year on year, there is a fall on 13%, which is to be expected. And again, I think economists had forecast that that would be about a contraction of 17%. So that's good. A lot of focus, I must say, is on UK debt surge. We've got some figures saying that it surged by £55.2 billion in May, which is 9 times larger than it was this time last year. So that's absolutely huge. And the UK debt pile at the moment stands at £1.95 trillion.
And I particularly find this very interesting. The Bank of England has apologized for the involvement of some of its past governors and directors in the slave trade and, of course, pledged to remove all statues and paintings of them from public display on the streets of its headquarters. Can you explain this? How is Bank of England connected to slave trading?
Well, in a statement, the Bank of England have said that they don't have any direct links to slavery. That's in a statement. So there are people that will question that. But, Chimmy, as you and I, as most people know, there's been a complete civil uprising, which was caused by the death of George Floyd in America. That's definitely reverberated here. And there have been so many discussions about Britain's history and the individuals that they choose to celebrate, many of whom have caused so much devastation to people of colour, particularly black people. And this has made some individuals reflect, but especially institutions and businesses. And the Bank of England are just a recent one. And they have decided that they will start taking down images within their building of any former governors that have links to the slave trade, and there are several of them. So they said they'll be doing that over the next couple of weeks. And also as well, they highlighted the fact that the minority levels in their institution is just not good enough. They set a target for themselves, I believe, to have 13% of people from BAME, which is a horrible word we hate here in the UK, but it does stand for Black, Asian, Minority, Ethnic individuals. I believe so far they only have about 7% in senior management positions. They want it to be 13% by, I believe, 2022. So they've still got a long way to go. It's controversial, but I believe on the whole, most people who are well respected in the UK of colour do believe that this is a good move. At least the Bank of England is setting a respectful tone.
And in another development, why is the chairman of the UK's competition watchdog quitting at this time?
Well, yeah, this is an interesting story, actually. Lord Andrew Tirry, he used to be a former Conservative MP. He's been at the head of the city watchdog, the market watchdog, for about 2 years, and he's really trying to reform and look after consumer rights. But he said that he will be stepping down in September. And I believe the reason why he said that is because he wants to do more. He believes that his position restricts him from looking after consumers and going after businesses that are not looking after their customers' rights. So, yes, he'll be stepping down. He has previously said when he was a Tory MP, before he got into the position, that he did feel that the CMA was unfit for purpose. And having been there for 2 years, he feels that he can do much more when he isn't there. So the Department for Business, Energy and Industrial Strategy will start vetting individuals for the new job in September.
Well, Juliana, it's not yet time to say thank God it's Friday, because you talked about the data released this morning. I'm sure you'll have to tell us how the markets are reacting to those data at intraday. Thank you.
Oh, well, thank you, Chime.
Okay, I'm back here for review of Thursday's trading activities. I have Temple here. Hello, Temple.
Hello, Chimeze. Thank you very much for this opportunity. Quickly, let's look at how the market settled for yesterday. We were down again, some 0.16%. Now we've seen 3 days of decline so far, and of course, just one day of gain. Today is the last trading day, so we'll see how that pans out eventually. Something that we'll get a bit of an insight to from a stockbroker who will give us an analysis of what that should look like today, an outlook for the day, basically. So yesterday we settled down 20.6 billion naira in terms of depreciation from what we've been getting in the equity capitalization of the market. If you look at what FCMB contributed to the volume of transactions, he actually had some 39 million units of his shares, contributed more to the volume of transaction. Yesterday was the most actively traded company in the market, and it was down. Volume of transaction was down at the end of the day by some 36%. Value of transactions also declined compared to what we did in the previous trading session by some 18%. And look at this, we settled at just 3,315 compared to more than this in the previous trading session. Moving to the sectoral performance of the market, banking stocks were down. Unity Bank, Jais Bank lost again this period, and of course Wema Bank. All of the key banks that you have in this space were down, except for a few others, and some didn't even change. Look at the consumer goods side of the market. Nigerian breweries constituted a larger part of how we declined yesterday by some whopping 20 billion naira in the market. Industrial goods side of the market, no movement. Insurance was positive, ICO, and of course a few other companies. Then oil and gas saw a bit of a comeback on the share price of O&O, which moved up by some 4.08%. We've got Jamiu Mohammed joining us. Jamiu Mohammed, a stockbroker with APT Securities and Fund. Good morning. Give us a sense of how the market is likely, what direction the market is likely to go for today. I mean, bearing in mind that we've seen 3 days of gains, just 1 day of, 3 days of losses, and of course, just 1 day of gain.
Yes, thank you, Temple Asadi. It's a pleasure to be here with you. But what I have to say is that the market may likely close positive today, bearing in mind that in the week we have seen 3 days loss and a day gain. And the reason why our market is about down for now is being resolved a little while, and we believe that today market should start to close on the positive territory, and we expect that to continue next week like that. And if you want to have a positive run like that in the market, it always starts on Friday. So I believe today market is going to continue on is going to start the positive trend today.
So you're trying to say that these losses that we've been seeing in recent times have bottomed out. Is that what you're trying to say, Jamu?
Yes, because of the fact that our liquidity in the market, in the equity market, was locked up in the Sukuk bond that the federal government issued last week, and if you can recall vividly, you realize that about 500 billion was locked down in that investment alone, and that is the fund, and that's the liquidity that's supposed to be meant to the market. Though I understand that there are risk-averse investors, and which the investment will not even come to the equity market. But if you take even 10% of 500 billion that is locked down, that was locked down in that investment, I mean Sukuk bond, that is 50 billion. If it is put into our market, we realize that our market will come back and will do better. And you see the value has been trading for all this while. Last week we have been having, this week we have been having about average of 2 billion trading in a day, which we're supposed to have about 5 billion that we used to have in an ordinary normal day. But what we are having now is not what is expected. So as it is now, since they are beginning their allotment in the Sukuk bond market, and the money locked down in that investment will now be returned back to the investor, and the money is expected to flow back into the equity market, and the market start to rebound, and we begin to see positive trend in the market.
All right. All right, Jami Mohammed, stockbroker with APT Securities, thank you so much for giving your insight. So we've seen a lot of rebalancing, portfolio rebalancing in the market lately. This means that, of course, lately we've also been seeing some interest across the NASD OTC, which is also up yesterday, brought back the psychological position to beyond 700. And of course, for the debt side of the market, we've got some interest yesterday, demand across the bond side of the market, quite a number of interest there. We got 9 deals here, and of course, 18.44 billion naira exchange across the securities that you have there. Look at the NTB end of the market. The 28th day to maturity paper also got some interest yesterday. We got some decline in yield by some 130 basis points, and it settled at 2.2% at the end of the day, in spite of the fact that there was an OMO auction by the CBN yesterday. Look at the open market operation side of the market, where we got the 250 day to maturity paper. A bit of interest here as well. Again, that's because being the secondary market, and there was an OMO auction yesterday, which is at the primary market level, we saw a lot of dealers and treasurers that moved to the side of the market. And if you factor in what we saw here, at the end of the day, we really should see some kind of interest, renewed interest at the secondary end of the market for today. Now we have Nkem Azinge, who is the fixed income dealer with UBA, joining us on the phone. Nkem, quickly talk to us about the open market operations auction yesterday, and of course, how the CRL debit of today is likely to shape the secondary side of the market with what we have left in the system liquidity.
Thank you very much for having me. Open market operations yesterday, the CBN offered a total of 80 billion. That was what they offered, and that was exactly what was sold. They maintained stop rates at 4.95, 7.79, and 8.99. What was noticeable from the auction was the bid range. So basically, we noticed that the CBN sold exactly what was offered, despite the fact that it was oversubscribed. However, none of the people who went for the auction bid it higher than the stop rate. So that just gives an insight to the fact that the CBN prorated the auction's winning. This speaks to the fact that the CBN might no longer be comfortable with using OMO as a primary tool for liquidity management, and just due to the fact that it costs more, and they have the opportunity to use CRR, which is more effective and which costs zero. So I believe that the fact that they sold exactly what was offered and didn't try to meet everybody's demand just means that they are more focused now on cost. And it just speaks to the general fact that we are definitely in a declining interest rate environment as markets expected.
Right, and
talking about CRR debit.
Well, I'm afraid we actually have to go. Possibly we'll get a further engagement on the CRL debates that happened this morning. Nkem Azinge, thank you so much for your thoughts. Thanks for sharing your analysis with us here. Nkem Azinge is a fixed income dealer with UBA PLC. Chimaze.
Thank you, Temple. And should I say, thank God it's Friday? Oh, yeah, thank God it's Friday. Anyway, that's a wrap of the program for today and, of course, for the week. Thank you for watching. I'm Chimaze Obi Iwago.